Aloha folks, thank you so much for checking out this video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to talk about a company that has been giving dividends the past 29 years, and for the past 20 years has a dividend growth of 16%. So if that's something you're interested, sit back, enjoy it, do me a favor and hit the like button. If you're not yet a subscriber, subscribe, hit the notification bell so you don't miss out on the videos that I put out. As always, please remember, not financial advice. This is just me sharing. With all that said, let's take a look at this company. So the company that we're talking about is Cummins. The ticker symbol is CMI. This is a company that designs, manufactures, distributes, and services diesel and natural gases, electric and hybrid powertrains. So if you go to their website, you can see a lot more of their products, parts and services, the industries that they talk about, as well as some of their information and all that. So if we go through some of their presentation, so you can see based on their Q2 2020 revenue. So here is their territory. They have like Asian Pacific, Middle East, Europe, India, China, Mexico, and then you got US and Canada, which makes up about 58%. Strong geographic diversification and global distribution network with presence in approximately 190 countries. So pretty big in my opinion. So if you look at some of their unconsolidated revenue, you can see from there, you can see some of their products and their EBITDA and their sales. You can see their EBITDA over here, as you can see from this one, as well as their sales. So now if we go swing over to tip ranks, based on their analysis, they rate it as a moderate buy, which is about 12 of them, 5 buys, 7 holds. Price target for this one is about $240. At the time of this video is about $211. 13% upside with the high of $275, average of $240, and the low of $190. Now if we go down a little bit, you can see some of the analysis forecasts. You can see a lot of mixtures of holds and buys, but their upside is pretty good, with a 30% upside here, 25% upside, 26%. So you can see some of them are bullish, and then some of them are kind of down. You see this one right here has a negative 10% downside and downgraded. If you look at the analysis based on their smart score, they rate it as an 8. And then there's some hedge funds holdings and transactions of decreasing. It's still bullish. And now if we go to Simply Safe Dividend, based on their rating, their dividend safety score rated as a 98, which is very safe. The dividend yield of this is about 2.97. Market cap is a base large cap, it's at 30.1 billion. Going over the key metrics, you can see during their session they have maintained it. Payout ratio is about 38. Looking at the dividend growth, you can see the last 20 years about 16%, last 5 years an average of 7%, and the latest is about 8.3%, which is fast. Again, you can see a good upward trend. Started about probably right here. Yeah, so it kind of just like stagnant here, but then from 2007 started going up. About 16 years of consecutive increases, 29 years without a reduction. When are you going to get paid? Paid on quarterly in the months of March, June, September, and December, and your annual payout would be $6.28, which breaks it down to about $1.57. Now going through some of the PE ratio, you can see 10 versus the industry of 16. Now if we go look at some more information, you can see total sales, return on investment capital 16%, return on equity 22%, and you got your operation margin, free cash flow, net to debt capital, net to debt EBITDA. Now if we go to Yahoo Finance, who are the top institutional holdings in here? You can see from the stuff, you got Vanguard, BlackRock, State Street Corporations, you can see right here, and you got Charles Schwab. All right, now comparing this one to the S&P 500, you got the 5-year one. You can see S&P 500 has been doing a lot better. There was a little bit of a closing here, but then afterwards you can see the S&P 500 has performed way better than this stock. Now if we go to NASDAQ, based on their analysis, they rate it as a buy. There's about 13 analysis, and you can see who are the analysis. You got Citigroup, Colwood and Company, Morgan Stanley, JP Morgan, Raymond James, you can see, and then the analysis rated about 240, and then you got your high of 275, your average of 240, and then your low of 190. Now if we swing to Seeking Alpha, there's an article on September 13, 2022, and it's basically just summary of Cummins has a reasonable current valuation. Company's focus on clear energy is likely to support a higher valuation. The Wall Street consensus outlook is bullish, with expected total return of 15% over the next year. So if you get a chance, go read a little bit about it. You can see 5-year one, 28%. And then you got a little bit more information in here about the 3-year growth, and then some other stuff in here. So now if we swing to Webull, based on their 27 analysis, they rated as a buy. You can see a strong buy 22%, a hold of 59%. Now if you look at the price target, they're a little bit more higher in 303, 240. 243 is the average, and then you got 190. Now moving along to simply Wall Street, based on their share price and fair value. Their fair value rated at 677, and the current one is 211, with a, based on their estimate, this is about like a 69% undervalued. So but if you look at the company overview, some of the great positive ones, trading at 69% below estimate of its fair value. Earnings are forecast to grow about 10%, and pays a reliable dividend of 2.97. And then the risk is that inside selling the past 3 months. Now if we swing to Robinhood, for the week performance, you can see a -3%. 1 month is about -8. For the 3 months, it's a +8%. For the year is -9%, and then for the 5 years, it's up positive, up 30%. Now, if we look a little bit more, you can see the 52-week low is about 184, the high is about 247. P ratio again is about 14%, and then you got your dividend yield. And then based on their analysis, you got a hold percent of 66%, a buy of 33%, and a sell of 0. That's it. I think for me, it's a good company. It's a little bit more in the pricier side, in my opinion. But it's a good company, in my opinion. But for me, I think I would rather buy another company, with that price. I'm still not convinced that it's a great one. Just for me, it's a solid company to invest in, but it's just not for me. I don't know if there's a place in my portfolio for it. But those of you that invest on it, I think it's a good one, but it's just not for me. With that said, thank you so much for watching, guys. There are other videos as well if you're interested in other great dividend companies. Take a look at it, and then check it out. All right, guys, thank you so much for watching. Please like and subscribe if you haven't done so. As always, please remember, stay cool, keep investing, and I'll catch you guys in the next video. All right, take care. Aloha.